The arts is a brutal business. Theaters, symphonies, ballet companies, galleries, mostly staffed by people who love, love, love the work and are so willing to endure some of the challenges that working in the sector provide. Like audiences are fickle, the market's competitive, government support is low and inconsistent. There's just a lot going on. Our next guest is building a case for a bank for the arts. His name is Jamie Bennett. He is a consultant at Lord Cultural Resources, and he joins us now to talk about the idea. Hello, Jamie.
Hey, Bruce, how's it going?
Canada has banks. We don't have a gazillion banks, but we have a number of banks. We have credit unions. What are the ways in which arts organizations are being underserved by the current infrastructure in our financial services sector?
Yeah, so most of my career I actually spent working in the United States. I've been up in here in Toronto for about the of 6 years. And as I've been getting to know arts leaders up here, I did that thing that's probably a horribly American thing to do, which is I kept telling people I didn't believe them when they told me what their life experience had been. So I was talking with executive directors of well-established arts organizations that had been around for a long time, consistently done good work, balanced budgets, done all of that. And they told me that they had to take out a personal credit card. No bank would give them a corporate credit card for their organization. They told me that they weren't able to get a commercial mortgage for property in downtown Toronto. They weren't able to get a line of credit. And my hunch was that there was some disconnect between the big six banks, the credit unions, the other financial institutions, understanding what sort of the core business model was. And so with a group of colleagues, we've begun sort of poking and exploring to see what that disconnect is.
And currently, and you haven't, been doing it for a decade, but currently, is your hypothesis that there is a disconnect and it can be resolved by communication or some, light changes in practices? Or is there a fundamental incompatibility with arts organizations and the financial services sector?
So my hunch is that it is just a question of education, of business education. And so when I talk with bankers, when I talk with lenders, I'll talk about a typical performing arts organization, one of the theaters that you mentioned. And the banker will look at it and will say, "Ooh, I don't think that I can bank them because the first 6 months of every year they run a deficit." And I say, "Totally understood. It's interesting to me that you bank a lot of e-commerce companies. And it strikes me that an e-commerce company has to run a deficit because they have to buy all of their inventory before they start making sales because they need to be able to fulfill them. And so even though they ran a deficit when they were buying inventory, they made it up once they began making sales. So for the theater, you've got to build the sets, you've got to sew the costumes, you've got to do rehearsal, you've got to create the inventory before you begin selling it to ticket buyers, to subscribers, and to members. And so structurally, I would argue that a theater or performing arts organization operates just like an e-commerce store. And if you're able to bank one, then you're able to bank the other. But people don't think of the
Mm.
performing arts as operating in that same way.
So, if it is a case of business education and lenders learning and understanding how the sector works, then why would you consider the need for a bank for the arts? Can't we just send them to school and, I don't know, have them shadow a stage manager who's working on a show so they can just see how things really work?
Absolutely. And this is where I sort of have to decide how much of P.T. Barnum I am and how much of a realist I am. Honestly, do I think that I'm going to start a merchant bank for nonprofits? I don't know. It's a pretty tough environment in Canada to start a new financial institution, but we decided to sort of take that swing out of the gate to get attention. At the end of the day, if one of the big six say, "Hey, we're really hungry for new customers, and we're really hungry for new customers who need full service banking, who want a checking account, a saving account, a credit card, a mortgage, a line of credit, project financing," I'm more than happy to educate one or all of the big six and help them create a desk, help them create a vertical. I'm happy to do that in the sort of credit union space. But we've got a big chunk of Canada's economy, a big chunk of Canada's jobs that aren't banked. And so, in a moment when our country is being led by a central banker, it seems like this is the moment to at least get the
Mm.
country adequately banked.
My husband is a former artistic director of a theater. His board chair for a good portion of his tenure worked at a big five bank, in fact, probably a big three bank. And I'm sure they had many of the problems that you talk about. If you look at any arts board, you don't have to look too long around that board table to say there's bankers there. So what's the issue? These are senior executives who are in positions of influence. Why aren't they picking up the phone and saying, okay, I was just in a board meeting. This is silly. We need to fix that.
Yeah, I've got to say, I don't really know. And again, in the US, we have so many financial institutions, probably way too many by any account, but we have so many that they've had to specialize. So there's one bank in New York City that essentially does all of the payroll for every Broadway show. Right?
Hmm.
They needed to find their niche in the market. And so they went deep. They understand how a Broadway show comes together, how the money flows, what makes for a good bet, what's a risky bet. And they just have learned that business. My hunch is in Canada, because you only have three, five, six banks competing for the 30 million Canadians, they haven't yet had to specialize. And so it tends to be that when you go to a bank, when you go to a BMO, when you go to a TD to talk about arts, they kick you over to the foundation and sort of say, oh, let's make a grant, let's do a sponsorship, let's do an employees' night out at the opening night or something like that. All of that is wonderful. And in addition to that, arts organizations are small businesses and they need access to the exact same banking tools that other small businesses need to do. And I think, in fairness, in the arts, we do sort of paint a picture that we're sort of special snowflakes. No one can understand the arts. It's such a magical, special thing that we do that and there are many ways in which that's true, but there are some ways in which we just overlap with any other small business.
Yeah.
So I think there's a need for us as a sector to also be honest about the aspects in which we're just like everybody else, access to banking tools that will then allow us to do our special snowflake things that make the artists different than the plumbers, different than the bankers, different than anyone else.
As you've been having these conversations, there are many like frequencies at which this could resonate for the person on the other side of the table. For some, they love the theater, they love the ballet, they think it's ridiculous that you can't get a credit card. Others don't care so much about the arts, but they care about the economic impact and the
Yeah.
contribution that this sector makes to the economy, makes to the quality of life here as Canadians. What are the things that you're finding to be the most resonant?
So I find the most effective are the people who just want to think about it with their day job hat on, right? I'm a banker. I need to open up new accounts. I need new customers. I need to sort of grow our base. Those are the folks I want to talk about because I just want to get in there and get, again, the basic tools that any merchant would want access to. It is helpful, though, as you said, that almost everyone has some sort of personal experience with the arts, right? Either I went to the theater and I loved it. Maybe I sing for worship on Sunday mornings. Maybe I, paint pictures with my grandmother, and, when we go up to the cottage or do something like that. So it is helpful that it's something that people have experience with, but we really are just interested in making a common sense business case that here is a part of the market that's being unserved. Why don't you take a swipe at serving them?
We've talked a lot about practices and
Yeah.
preconceived notions and how communication and education might be able to overcome that. As you've been learning about the complexity in the Canadian marketplace, are there regulatory things that need to be fixed in order to, if not enable lenders and financial institutions to engage on this, then at least to remove barriers to them doing the things that you want them to do?
Yeah, and I would say it is possible. I would hazard a guess that we could do 90% of what I would like to see happen within the current regulatory environment. It's just that question of education and common language, right? I want to be able to describe my business model to you in a way that it sounds like an e-commerce business or it sounds like any other small business lending that you're used to doing. I will say more broadly, and I am not an expert in this, so I leave it, Bruce, to you and others to talk about it. as someone who is newer to Canada, only been here 6 years, I am surprised at the need to sort of register in every province and not being able to sort of work across the country. I am surprised at how hard it is to start a new financial institution. I am a little bit surprised that credit unions still largely rely on the big banks to do some of the actual aspects of their lending so that you're not able to actually get out from under the commercial banks if you're interested in working with a credit union. So there's absolutely room for policy improvement. But in terms of what I'm talking about, is kind of basic one, two, three can absolutely happen within the existing regulations.
We've been coming at this sort of from the bank's perspective. How can the banks improve things, their processes, their ability to be flexible to the needs of arts organizations? Through the other door, there are executive directors and CEOs and development folks and CFOs and all that. What are one or two things that they could do to ready themselves for those conversations with the banks? And I'll give you one example. A lot of them are sitting on a significant endowment, and they have a wealth management firm running that endowment, sometimes providing cash flow into the operating expenses of the organization, especially the biggest ones. What are the ways in which they can kind of stand tall and summon their heft and have some of these needs met?
Well, just one quick example is Opera Canada is the national service organization for opera companies in Canada. And they realized that there was a real interest in their community about doing co-productions, having three or more opera companies commission a work. And the way that opera works and the way composition works, that would happen sort of 10 years in the future. The banks didn't want to touch that. They sort of said, it's opera, it's 10 years in the future, our risk committee can't handle it, go away. And so what Opera Canada did was Christina Lowen, the amazing woman who runs it, said, we've got a cash reserve, not a formal endowment, but a cash reserve. We're going to finance co-productions for our membership. So they actually set up their own internal lending program. And guess what? It's had 100% payback rate because if you have three opera companies doing a commission, it's going to recoup. And she understood the business model and understood this was a low risk thing. But I think a lot of arts organizations haven't been practiced and maybe don't want to learn to speak banker. Right? There are words like debt that have been driven into us as a sector is a bad word, even though folks that are more fluent with finances know that there's a difference between good debt and bad debt, right? If I need a line of credit to get me through that first 6 months of the year that I can absolutely pay back and I can get it at 2 or 3% interest, that's good debt. That makes sense. That helps with my cash flow. If I end up in a situation, there's an arts organization I knew in New York that eventually went out of business owing more in interest than it did in principal. Wow. That was very bad debt, right? So I do think there's a world in which we need to educate ourselves about being fluent in the kind of language so we can meet the bankers where they are and explain our business model when we need to explain our business model in addition to explaining our artistic model.
Well, it's really interesting, and we'll finish on that thought, but you're asking artists to learn the language of the bank, and artists have been asking patrons to learn the language of opera, ballet, symphony since the beginning of time. So I think that really makes sense to think about that going in both directions, that the righteousness doesn't serve anybody. And I really love how you've outlined the argument here, the case for a bank for the arts.
Beautiful. Well, it is great to see you, Bruce. Thank you so much for having me on, and I look forward to seeing you again soon.
Okay, take care. Jamie Bennett, consultant at Lord Cultural Resources. He was here to talk about some of the challenges that arts organizations face and what could be some solutions ahead.